Michael's investing here with a new video. All right, we're talking about 5 stocks to buy for 2021. These are going to be great stocks, set you up nice, pay a nice little dividend while they're at it, grow their dividend maybe, but most importantly, grow your portfolio, get you exposed to that raw growth and the stuff that's been making 2020 one of the most interesting investing years to date. First up, we got Kroger. Kroger's profited greatly from the pandemic. They've been rewarding their workers, so their profit margin has gone down a little bit. But what we're looking at here is the year-over-year same-store growth, and it's been increasing significantly due to the pandemic. But even coming into that, they were increasing from around less than 1% to over 1.5% growth. That's kind of significant, especially when you consider stores. And when you compare Kroger stock fundamentally to Walmart and Target, two of their greatest competitors, Kroger is undervalued. It has not gotten the boost this year that the other two have, and they're largely in the same segment. Kroger has the online business and the in-store. They're growing up. Broadcom is great for chips. If you're looking for semiconductors, they pay almost 3.5 dividend, and they just keep going up. You have around a $14 per share dividend, in addition to Broadcom signing 2 separate deals with Apple to continue to supply chips and such for the products. So you're looking at huge growth here, huge potential. This is the future. Now taking a swing to the healthcare side. Someone who has arguably profited from the pandemic overall has been Abbott Laboratories. And they've got several different sides. So their stock has grown significantly. But the only reason that they're not way up there in the 150s, 200s is because it was slowed down. So their other industries were slowed down by the pandemic. They comped for that by making tests, and they even just got an at-home test approved. But you have to see how much more growth there is left in this stock. It has a lot of room to run, and they just increased their dividend 25%. That's pretty big, especially considering it's a healthcare stock. Discover, as the transactions become more digital, even companies are not taking cash right now. Digital transactions equates to more money for the owners of the digital. So looking at credit cards, Visa, MasterCard, American Express, Discover's the smallest of them, but it's still a major for credit card. And so the more credit transactions there are, the more online transactions, the more times they get a piece of a little bit. Every time that someone buys and sells, they get more and more. Because as you spend that dollar, when it's cash, no one gets it. But when it's credit, they get a little bit of that every time you use a credit card. Nvidia, looking at electric cars. This is the way to play it. All right, so you have all the electric cars are going to need the fancy new integration with technology. And Nvidia has proven themselves with gaming computers, consoles, and PCs. And now they're coming to prove themselves with cars. So they have deals with Toyota and Mercedes-Benz to help produce and supply their electrification of cars and their AI and self-driving technology. And a bonus buy. All right, we're also looking at Digital Realty. So essentially, this company sells cloud storage. It's an REIT, a realty investment trust, and it sells its cloud storage out to people who are using it. So how Apple charges however much per gigabyte, this company too is able to sell out the cloud storage that they possess and make a fortune off of it. And as their need becomes more demand and more need, this company can just scale up and grow and increase the prices. So it's definitely a good buy. Hopefully this helps you guys. Check back in maybe later and offer some more advice, but this is what you got for your 2021 buys.